Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And the markets cheer the Fed rate hike. Three cheers for Fed rate hike, 75 basis points in second consecutive month. And the markets are happy. Why? I'll come back to this. Before that, just join me on my Twitter spaces tomorrow 8 p.m. at or Friday 29th July, where I will talk about the three I's with the impossible trinity for RBI: inflation, interest rates, and INR. Join me for the discussion on spaces. And coming back to the markets, the equity markets were up sharply. The rupee was up, was strengthened against the dollar. Gsec yields were steady at lower levels. US Treasury yields were again steady. And in the corporate bond market space, Hero Fincorp, part of the Hero group, is raising 3-year bonds at 7.99%. So a lot of good corporates are raising 3-year money at closer to 8%, which is good level for investors. And back to the Fed rate hike. Why are the markets so happy? One is that the market believes that this is after this hike, the Fed will not raise rates very sharply by 75 basis points. They'll go slow, and hopefully that they look at inflation. Inflation could come off if commodity prices stay down. Having said that, the central banks are still way behind the curve on inflation control, given that they have pumped so much of money into the economy. And the only thing they have been doing the last 14 years is printing money. So it's not going to be an easy task for the markets or the central bank in the coming longer term till things stabilize and the markets are weaned off the thrust provided by central bank in terms of cheap money. And with government debt so high, it's going to be even more difficult for interest rates to come off. Do not forget to download our app, Quick Invest by INR Bonds, the best list of curated bonds with our own proprietary risk score, which is driven by factors that is not only related to the credit rating. And hence, the risk score is that much more robust for investors to check the best bonds to invest in. And the investment process itself is a seamless in-app investment process where there is no risk for the investor, and the bonds come to the demat account on the same day of where the funds are transferred. Thank you very much for listening in. Do not forget to subscribe to our YouTube channel if you've not done so already.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.